post-consensus edition of the Hash. Back to normal. Early. What the hell time is it? There's light out? It's daytime? This is so weird. I'm so disoriented. We can't even do desk drops anymore. Why are we even here? I don't even know. But anyway, thanks so much, folks, for tuning in this week to Consensus. It was a spectacular event. Really great stuff was shared across the course of those 4 days. And now we are back to normal. The show must go on. It's the Hash. Naomi Brockwell, please lead us off today.
Absolutely. So Biden is expected to unveil a $6 trillion spending plan, and it's going to begin in the fiscal year beginning October 1st. And that includes $1.52 trillion in discretionary spending. There's a whole bunch of stuff to unpack here. But what's interesting is that Bitcoin did not surge at this news. And I have a few theories for that. But I'm going to throw this to the group, because usually when you see, oh, we're going to print a whole bunch of money, people are like, okay, let's put our money into Bitcoin because it's a good hedge against economic instability or inflation. We even had Ray Dalio echoing that at Consensus, which was really interesting. He's saying, I would rather put my money in Bitcoin than bonds. So I'm going to throw this to the group to start off with, just to get your thoughts on what you think is happening. Zach, let's start off with you.
Well, I don't know. It's interesting. So we heard Dalio talk about inflation. We heard Kathy Wood yesterday talk about deflation. Bitcoin plugs into both those scenarios, and it's really interesting to see how the market is sort of shaping. I guess not shaping, but sort of reckoning with some new ideas potentially on what the Bitcoin story is as it relates to inflation. You're right. I mean, Naomi, one would think that this news would maybe give a little shot in the arm to Bitcoin traders who see this as a potential inflation hedge. That's been a part of the narrative for a long time. But all of a sudden, I think we're hearing from some pretty smart people in this space who are thinking that maybe that's not the case. So I guess it's a bit more of an open question than it had been in the months leading up to this latest run. And I'm curious to see if we'll see any activity when more details of this announcement get out there. But yeah, that's my initial take. I mean, I'll throw it back to you, Naomi. I think you probably have the most nuanced opinion on this one. I mean, why are you surprised that the price isn't responding?
So I'm not terribly surprised, to be honest. I think that some people may be predicting that, well, the Fed's going to raise interest rates. I disagree with that, because the amount of debt held by the public is 100% of GDP. So they start raising interest rates, so they're paid a lot more in interest to pay off that debt than they're getting in. So it doesn't make any sense for them to do that. They've really backed themselves into a corner. I think the biggest issue, honestly, is the Elon Musk news. We have this big narrative driving Bitcoin right now, talking about the environmental concerns. Bitcoiners will say, well, this is all FUD. I kind of agree with them. I think that Bitcoin is important enough that, yes, it warrants using energy. But a lot of people disagree with that. And it really did give Bitcoin a hit. The price was pushed right down. And I think that a lot of people are expecting that there's going to be, the environmental concerns around Bitcoin. This is all going to grow as we go forward. So maybe people are hesitant in putting their money there. I think, obviously people are still worried about inflation. They're still worried about all of this printing. If you look at the gold charts over the last month, it's just been, going up and up. In the last week, it's been going up and up. So people are taking their money out of cash. I just think maybe they're deciding that other assets are safer right now, given the uncertainty around the Bitcoin narrative. But I'll throw this to you, Will. What are your thoughts?
Yeah, I think you kind of touched on a few interesting points there. I think right now the environmental movement and the environmental tweets from Elon Musk and others is a big reason that we kind of saw a price drop. And I think we'll continue to see kind of like this doldrums for the Bitcoin bull we have right now. Like, we were so used to all-time highs for months on months, and now we're just seeing kind of like it's steady around 40K. But I think in general, last year kind of tricked a lot of people, because we had this idea that Bitcoin is super tied to inflation. Like, if the Fed prints money, Bitcoin's price goes up. Well, to be fair, like, there wasn't an asset class that didn't go up last year. Stock market's at an all-time high, even though we had the worst economic year probably in US history. So there's a lot of disconnection between assets, whether it's Bitcoin or regular stocks, and then the actual economy. And so when you see Biden unveil like this new $6 trillion plan, you might think gut instinct says Bitcoin's anti-inflationary hedge. Well, it wants to be that. It's not there yet. And even right now, there's about 900 Bitcoin created per day. And that's actually a decent amount of Bitcoin, right? And those have to go find places in the economy to go sit. And then there's whales who want to get rid of their Bitcoin. So we're not there. It's not going to be there for a while, probably a decade or more. So it's not surprising to me the price didn't move. And I think you're totally spot on by attributing it to Elon Musk's tweets.
Yeah, I'll add to that though, Will. When you said that it's disconnected from inflation, I would disagree, and I would actually cite the same thing you cited for that disagreement. Mm-hmm. We saw everything in the economy going up. I think it is because all this money is being pumped into the economy, and so especially stocks. I mean, that's always a favorite, right? When you have money being injected into the economy, stock prices are probably going to rise with inflation, and so people are considering that somewhat of a hedge as well. So it is interesting, but I definitely think we've got inflationary bubbles all over the economy right now. I'll throw it back to you.
Yeah, just to respond to that really quick, I definitely agree with you. So I guess the more nuanced point I'm trying to make is like the expectations during inflationary times is that assets might go up, including like Bitcoin or stocks or whatnot, and we saw that. But that doesn't mean it always goes up. Oftentimes these assets just go up because other people expect them to go up. People expect a Bitcoin to go up and they start putting money into it. And that doesn't necessarily, Bitcoin's price rise can't necessarily be derived from its anti-inflationary measures. It's just more of like a narrative feature. People put money into Bitcoin because they expected it to go up.
Yeah, for sure. Ben, what are your thoughts on all of this and what's happening in the economy and where Bitcoin is headed?
Yeah, I think the expectations game is really interesting, particularly because we've seen, a lot of stimulus going into the economy over the last year. So I'm wondering if there's maybe a little bit of fatigue there, like the price point can't move every single time we start pumping out money, because that's been happening for so long right now. And I do think it shows that the narrative is becoming more complicated, Will. Like you were saying, it's not just a one-to-one right now, right? It's not responding directly to one sort of, variable. And the ESG stuff is a very real concern that we're going to be talking about. The inflation is a very real concern. And we're just seeing the conversation round out in such a way that I don't think Bitcoin is going to maybe continue as it wants to respond just to something like inflation as it becomes this sort of policy question and how people are using it and what are the implications and all these other things that are really, coming to the fore.
All right,
Yeah,
we'll switch gears here. We will take it to the land of the tech giants. Let's do this thing. 2 days ago, CoinDesk was first to report that Apple is looking for someone with crypto experience to head up its alternative payments partnership program. So this caused a lot of interest in the broader market. Apple has long been pretty wary of cryptocurrency, so for the Cupertino tech giant to seek out someone specifically with experience in this space was quite notable. Details are sparse, but it does show that Apple is potentially considering putting crypto functionality into its Apple Pay system. Maybe. We'll see. I'm going to throw this to you, Will. I mean, I think these hiring things are really interesting. There's a little bit of a tell on the part of these big companies. They put these things out. They want to seek qualified applicants. They don't always necessarily want to announce the goals. So oftentimes these job posts are a rich source of scoops. So I'm going to toss this to you. What do you think this means for Apple's current approach to crypto payments?
Yeah, I think everyone wants Apple to get involved in crypto. Obviously, they're the I don't know what the term is, but if Apple got into Bitcoin, that would help validate the thesis a ton, just as a technology stack, especially with all the cash that they have on the sideline, and they've just been holding as a treasury reserve, and they've been holding it in dollars. That's been well known for years, and they have a lot of accounts offshore just to kind of keep that money away from Uncle Sam. So that's an interesting aspect of just the broader picture with Bitcoin and Apple. I think from a payments perspective, I think we need more details. I mean, there's been a lot of banks over the last year that have also kind of been looking for people who know about crypto, who kind of lead up these alternate payment schemes. Doesn't always necessarily lead one-to-one to Bitcoin adoption. Sometimes it's just one-off. They want a contractor or something like that. And then Apple's it's obviously very deep into the privacy space as well. So it'd be interesting to see if they have an internal team already working on this that we don't know about. And this is just kind of leading into that. I guess the most things I can say about this is just it's a lot of speculation based on these job hiring. So I'll get back to you, Zach. I want to know what you think about this as you guys kind of crawl through these databases looking for crypto jobs at bigger companies.
Yeah, always an interesting signal. I'm going to bounce pass it back to Ben. I saw his hand go up. Ben, what's your take here?
Yeah, I mean, I think this makes, in one hand, a lot of sense, and on the other, absolutely no sense. So Apple's really good at tech, right? They do a lot of development around this. They really are focused on like user experience and making things easy to use. Will, like you alluded to, they do have more of a privacy focus than like Android or some of the other alternatives out there. That being said, like Apple is one of the biggest walled gardens there is, and they absolutely want control over everything that goes on in this. You know, we see this in terms of what apps they let on the App Store. We see this right now in terms of them and Epic duking it out in court over, you know, how Apple thinks about its control over these things and even the in-app payment systems. And Epic sort of raised in its lawsuit against Apple that, you know, if it weren't for the App Store kind of rules and Apple taking a cut and everything having to run through Apple, you know, vendors could get paid in things like cryptocurrency and Bitcoin. So on the one hand, I think that might be a part of this. You know, it's in the news. It's something that they're dealing with legally. On the other hand, like I don't see Apple being super willing to give up control over anything within their ecosystem. And that makes the prospect of like crypto in there, you know, somewhat daunting. So we're going to be hearing more about this, I'm sure, as we get more reporting. But that's sort of the thing that I'm wrestling with in this story.
I mean, Ben, but don't you kind of think that unwillingness to give up that stronghold could be their demise, and maybe they're seeing that now?
I mean, I think that the Epic case is going to be really interesting to see where it goes. It has been a saga. I've been following that one on the side, and it is just so convoluted. We're talking about like what a game is, what like a computer is, all this other stuff. And they're even talking about things like the metaverse, right? You know, Epic's kind of saying like, no, we're a metaverse. We're not just like Fortnite, for example, isn't just a game. It's so much more than that. So I don't know if it's going to be Apple's demise. Apple's obviously one of the biggest companies in the world. They have so much cash on hand. And I think that, you know, we're quite far from seeing them sort of fall off in a meaningful way.
Yeah, I'll add to that and just say that Apple has always been kind of cutting edge in payment methods. Like it was really them that created the transition from this Napster world where people were pirating music because they didn't want to buy a whole album to this, you know, pay per music system that they have in iTunes. And so I think that it's really interesting how they were kind of thinking about different payment models there. I wouldn't be surprised if they incorporate cryptocurrency, but just do it as a P2B model where they distribute the cryptocurrency to other people. I don't think they're going to implement P2P anytime soon. They're not going to allow Fortnite to, you know, interact directly with users, but I can definitely see them integrating cryptocurrency in some form on their platform. And obviously, like we reported, CoinDesk reported in February that through BitPay, you can already use cryptocurrency through Apple Pay. So if you use one of their prepaid MasterCards, that's now compatible with Apple Pay. So, you know, there are lots of ways that people can use cryptocurrency interacting with this world. But I do see Apple moving into that world now. Zack?
If I'm zooming out a little bit and maybe beyond payments, right? If I'm like, you know, an NFT platform or one of these wallet backend providers, this is really exciting to me because potentially Apple is looking for someone to help them make a native digital wallet, right? That's what they're looking for here. Someone with experience in digital wallets and cryptocurrency, etc. So if they were to say, hey, okay, wow, this NFT thing has legs, or hey, this digital currency thing has legs, and they wanted to make a native application to iOS that made that easy to store all that stuff on your phone, that would be pretty interesting if there was a native digital wallet that could hold crypto assets as well as, you know, ERC 721 non-fungible tokens and other things like that. That'd be kind of cool. So obviously this is all perspective, very early days, but you could imagine a world where there would be a native sort of crypto and NFT wallet on your iPhone. That'd be kind of crazy. All right, well, let's leave it there. We're going to take a break, guys. And then when we get back from the break, we're going to go and talk about DeFi. We're going to talk about Uniswap, and we are going to ask Will, when liquidity mining, sir? And that's going to be fun. So stick with us. When, that's W-E-N, by the way, W-E-N. We're going to take a break. It's the hash. We'll talk to you when we get back. Thanks.
And welcome back to The Hash. Normcore style today, no more consensus style. We are back at our regular time slot. Thank you so much for following us and tuning in. So this is a little bit of news that caught my eye today. Robinhood has failed to block state regulators from moving forward with an enforcement action alleging that the platform encourages inexperienced users to make risky trades without safeguarding limits. And we've talked a lot about Robinhood in terms of the crypto, in terms of Robinhood going down all the time with every spike seemingly, in terms of them introducing Dogecoin and stuff like that. But I was a little bit struck here just because this seems to be, coming in advance of them trying to go public. And honestly, I didn't see a huge difference between this case being brought and then potentially cases like this being brought against cryptocurrencies or entities that are trafficking in various kinds of crypto. But Will, I want to get your thoughts initially on this one, and then we can take around the horn.
Yeah, don't have a ton of thoughts on this one right off the bat. I'm actually going to bounce this right over to Zack. He's a Robinhood beat.
I love that we bounce past now.
No, I know. We're doing a lot of bounce past today.
I got it.
In the sports desk.
We should
Idea Live.
Oh,
But no, I'll stop
way.
there.
Yeah, I mean, I keep thinking about Kathy Wood. I think she said there's no throat to throttle with cryptocurrencies. Whatever that image was, it was lovely, right? So Facebook rolled out Libra, and there was a throat to throttle. They could haul David Marcus and Mark Zuckerberg up to Capitol Hill, and they could roast them as much as they wanted to, right? With cryptocurrencies, there's no throat to throttle, right? You can't get Satoshi Nakamoto on the Hill and start yelling at him about whatever. So this is a case of a throat to throttle, right? So when you said, oh, somebody could go after cryptocurrencies, they can't really go after cryptocurrencies, but they can go after intermediaries that have
say exchanges or things like that. Yeah, like
exactly.
the business
so they could go after
Coinbase,
or they could go after Kraken, or they could go after anyone who's again providing these free markets to people. And I think it goes back to what we were talking about. I think with those advertisements in the London Underground, right? This sort of the inadequacy of current consumer protections in this space. I think we keep seeing it again and again. Whether it's a crypto app providing access to the upside and downside of volatile markets, or whether it's Robinhood providing the upside and downside to the volatile meme stock markets. So the fact that this is happening, I just feel like is another example of that. I don't have a ton of insight into how this case has been going, but it just does seem like one of those things where decentralization could have its advantages, right? But I'll toss this to Naomi.
Yeah, I'll add to that. I agree, Zach. And I think that we're going to see more and more people gravitate towards decentralized platforms that don't have that throat to throttle, because it allows people to accommodate their risk appetite. The governments are there saying, well, this is too risky for you. We're going to decide for you. I think people are fed up with that. And that's why we've seen such a surge in the DeFi world, where people don't have to, abide by what the government thinks is in their best interest. They can make their own choices, right? And so in these decentralized platforms, people are going there, they're allowed to do what they want, they're allowed to take the risks that they want, and they get burnt in the process, but they learn. I think that's all a good process. And it's kind of hypocrisy, because you have the government that also allows the lottery, right? It's government sanctioned. People are allowed to bet in a system where they're almost surely going to lose, but when there's a chance that there might be an upside, the government's like, well, that's too risky. Let's make sure that we clamp down on that. So I really don't like this narrative of the government deciding for users what's in their best interests. And I'm glad that now people have options. Now they can, use this decentralized system, as Kathy Wood said, that don't have this throat to throttle. And that is the whole value proposition of cryptocurrency.
I will say something too that this reminded me of was something Brian Brooks was talking about yesterday when he was kind of advocating as the CEO of Binance US, cryptocurrencies don't offer more systemic risk than anything that we already have existing in the financial system, right? They're different, but they're not inherently more risky or less risky than something else. And the fact that, that there's actions being taken against Robinhood for some of these securities and a lack of limitations, and sort of maybe the gamification of finance more generally, I think, sort of illustrates that in a lot of different ways. This is just kind of a feature of systems, and, cryptocurrency is not more risky or less. It is just another part of a larger financial world that's being developed. But Jen, what are your thoughts?
I think we all know that, and we keep drawing on these conversations that we had during Consensus, and I think it's a certain type of person who attends Consensus. But I think when regulators come down on platforms like Robinhood, the general public think, well, actually, maybe there's something wrong here, and maybe what I'm interested in or what I'm doing is illegal. And maybe they start to pump the brakes a little bit. I know last week, or maybe this week, God, all the days are just kind of blurred together. Earlier this week, we were talking about people not wanting to break the law. And I think there is a large group of that mainstream audience that want to do what the government says because they think that's right and they don't want to get in trouble.
I think that's kind of a circular argument. It's like people don't want to do these things because they think they're breaking the law. It's like, well, if they weren't breaking the law, would they want to do this? So it's just because the government puts a law in place that they're suddenly like, well, no, I don't want to do it anymore. Like we should be opening the gateway to allow people to follow their own choices, right? Make their own mistakes, abide by their own risk tolerance. And so the government is making a lot of presuppositions about people's risk tolerance and what their risk appetite should be, and, potentially making things illegal. I don't think that should be the guide for people, and people shouldn't just be curtailing their habits because they think it might be illegal.
I agree with you,
they should
but I think people do that.
Well, obviously they do that, but I mean, the government, they're not doing the right thing by people by infantilizing them in this way and not allowing them to make their own decisions. But Zach, I'll throw this to you.
Yeah, I mean, just last thought. I mean, we saw in that imagery, whether it's cryptocurrency or all these fintech firms, the technology is there for this investing for everyone motto, but the regulatory system is absolutely not set up for that. And I think what we're seeing is we're reaching a tipping point where the consumer interest behind this ethos of investing for everyone in whichever capacity is overwhelming the regulatory capacity of the current system. And I think we're going to keep seeing these stories until something gets hammered out. It's going to be really interesting. All right, let's change gears.
It's DeFi time. So
let's do it.
Similar thread as the Robinhood story.
DeFi corner.
Uniswap enables everyone to trade seamlessly and permissionlessly across the Ethereum network. And they launched their V3 in May, and now liquidity mining may be on its way back to that project. So for a little context, last year Compound kicked off liquidity mining, which also kind of kicked off DeFi summer as it came to be known. Essentially, liquidity mining is you put some stable coins or some other asset on the platform itself, and then the platform will pay you out the native token of that protocol as a sort of incentive to keep your liquidity on the exchange. Uniswap did a similar thing. They did an airdrop in September, which pleased a lot of DeFi degens, and then they initiated liquidity mining for a few select assets. Unfortunately, it dried up in the following November, but it may be coming back with a new grants program that is under voting right now for the governance feature. So a lot of buzzwords in tech there, but I think the overall point there is that there might be more Uni tokens that you can earn yield on just by depositing assets onto Uniswap. So give this over to Zack, who kind of talked about this with Hayden the other day at Consensus.
Sure, I'll do a quick one and then I'll toss it to Naomi. I mean, I think the innovation here that Compound and then later Uniswap were able to do with just the ability to bootstrap liquidity onto these platforms by producing these economic incentives was a really powerful mechanism that really stole the story, I think, over last summer. So this is a big thing. I mean, people tend to like free money. People tend to respond to incentives where they can commit assets and then be rewarded for doing so. So for Uniswap V3 to be considering this, as Hayden Adams said, and potentially very soon, I think is quite interesting. But I'll toss this up to you, Naomi.
Yeah, I just have a question for you, Will. So were Uni tokens, was there a fixed supply and it was just in kind of a treasury and then that's how it dried up and so they're considering minting more? Is that the story?
Yeah, so Uniswap took a pretty heavy-handed approach to governance of their exchange, which is fine. It's their project. So initially they allocated a lot of the supply of Uni, which, correct me if I'm wrong, but it's like 4 billion or something like that. But I think Zack would probably know the exact number a little bit more. But they divvied it up. So some went to the community, people who had used Uniswap before. Some people went to people who had architectured the protocol. Some went to early investors like Paradigm. And then some went to liquidity mining to kind of bootstrap more people getting onto the exchange. And there's a lot more into that story. Actually, a really fun story with another protocol called Sushi Swap last summer, and this thing called zombie mining. If you go on CoinDesk and just kind of type in liquidity mining into the top bar, those stories will pop up. Pretty fun kind of vague story about DeFi summer. But now they're bringing it back, or maybe bringing it back. And I think the point is just to bring more liquidity onto Uniswap V3, kind of bootstrap that. And it also helps bootstrap some of the applications that Hayden and the Uniswap team are trying to get built on top of Uniswap. So I think that's another aspect about these DeFi primitives is you have Uniswap built on Ethereum, but then you can build projects on top of Uniswap itself. And that's what they're trying to incentivize is creation of more protocols on top of Uniswap.
And do we know how much Uni they're planning on mining to add liquidity?
So,
I think they have 430 million in reserve right now.
Yeah.
I believe that's the number.
430 million units. So they can kind of divvy that up. The governance on Uniswap is like pretty static, like famously so, compared to some of the other projects out there. And all those units or assets, I should say, are reserved mostly for just kind of divvying out and getting people to build on top of Uniswap.
I see. So they're not minting anything new. They're just potentially releasing something from their reserves.
No, I think it's a fixed supply overall.
Got it.
Yeah, and we should say too, maybe for people that are less familiar with DeFi or crypto more generally, another part of this when we're talking about like governance and these sorts of things, like, you know, using Uni, the community members, the people that hold Uni and have gotten it previously can like decide which way the protocol goes in terms of, you know, whether things get updated, how things get changed, and they vote on this sort of using Uni. So that's like a feature of a lot of these different systems, but it's the community being able to make choices that impact not only themselves, but the kind of protocol writ large. So I think that's just worth mentioning if you're coming in cold to DeFi and some of these things more generally.
1 billion Uni tokens were minted at Genesis. I just looked at the initial Uni blog post. It's okay. It's okay. I won't tell Hayden. He won't come get you. Can we just shout out Abe? Can we just shout out Hayden's dog, Abe? Did anyone see Abe in that interview?
Oh my goodness.
We all did. We were waiting to go on air last night.
That was nice. That's a
Abe
good
makes
doggo.
interview.
I have another question for you, Will. Sorry for my dumb questions, and then we can quickly wrap it up. So with the drying up of liquidity on Uniswap, did we see kind of DeFi take a hit because of that? So, you know, we find that these liquidity tokens really did provide the fuel for these networks. And is that a lesson to other providers who have like a fixed supply or are not releasing as many coins? Is that a lesson to say like, well, actually you need constant release of these coins for this network to work?
No, that's actually a great question. And a lot of people expected that last November when liquidity mining ended. It didn't happen. People want to trade on Uniswap. And then the people who provide liquidity still get LP rewards, is what they're called. And you just get a cut of every trade that happens on Uniswap for your assets that are deposited. And yeah, so
you just don't get the bonus of like extra, you know, being airdropped. Got it.
Yeah.
All right. Should we change track and...
Right. Okay, so we're heading over to Dubai now. The Dubai government says that Dubai Coin is a scam. So reports circulated that Dubai launched its own cryptocurrency after a fake press release was published on PR Newswire. The press release is no longer there, but it said the currency would be controlled by the city and authorized brokers. The release directed unassuming investors to dub-pay.com to buy the coin at a starting price of 17 cents per coin. So there's a lot going on here. I read the archived version of the fake press release, and it brought me back to a conversation that we've been having on this show recently about scams seeming very real. The press release seemed like any press release you would read. It felt like it was written by someone who was experienced in PR and marketing. Naomi, I think you brought this up earlier this week. It didn't feel like that very scammy kind of Nigerian prince email that everyone has received at one point in their life. But it turns out this was a phishing scam. So the Dubai government tweeted and said that they had nothing to do with this. And so, Ben, I'm going to kick this right over to you because I know you probably have some thoughts on this.
I mean, hey, don't always trust press releases, right? Like that's another thing to take away here.
That's the number one thing that we should take away.
Those scammers, they really controlled their own narrative on this one. So
they did. They went direct to the audience.
They really did.
They were like, "We're just going to launch a press release."
All right.
Yeah.
Yeah. Wow. Well.
Yeah.
Good thing.
It was that's my immediate takeaway. I definitely think like, you know, if you're a scammer, it pays to be good at marketing. Like that's a whole nother part of this. Like we were talking about the, you know, Naomi, I think earlier this week we were talking about how like the site looked really legitimate and it was definitely something people could go to and interact with and was friendly seeming and had that like glossy sheen that people don't always associate with like poorly worded emails that are in your spam folder or something like that. What I thought was interesting here is like just how many media outlets like ran with this. And you know, they kind of said it was the official partnership with Dubai, which made me also be like, wait, is this did they think this was like going to be a CBDC or something like that? It was all very confusing. And to the point where like the government's having to put out statements about it though, that's like bad. That is bad when it gets to that level of having to disaffiliate yourself for it too. And so, you know, this shows that, you know, on the spectrum of scams, some of them can be quite sophisticated. So again, as always, do your research. But I do think this was interesting just in terms of the scale and pickup it got. And I'm curious to see what the repercussions are going to be from the fallout here.
I want to just add there because you did mention the DeFi 100 that we talked about last week, which was a scam site. Yeah. It looks really legitimate, got taken down. They said, haha, we scammed you. Turns out they might have actually been hacked because according to their Twitter, yeah. So according to their Twitter,
or is that a part of the scam?
They say that the website, maybe
we don't know anymore.
That's why you got to be careful.
The thing.
But they said the website has been restored. They haven't made any exits. They're trying to claim back the narrative on their Twitter. So that's kind of an interesting development. I just wanted to mention there that, you know, the website looked really legit. Turns out it might have actually been legit, but that's not always the case. I've dealt with a lot of scammers in the past, and they're really, really convincing because, as we said before, that's their job description, to try to convince people and seem legit and earn your trust. And these processes can go over, you know, days, weeks, months, years. Some people are groomed for a very long time. So just, yeah, be really careful out there. And it seems like this Dubai coin really was just a phishing site to try to get personal information about people. What kind of information were they collecting, Jen?
So it said they were asking for name, email address, and phone number, I believe. And then they said that a customer service representative would call you to then help you convert your fiat to this Dubai coin. And so that's what was going on there. There is actually a Dubai coin though, and that coin shot up 1,000% within 24 hours of this phishing scam happening. So a lot going on in this story. But Will, I saw your hand go up.
Yeah, no, I was just going to comment on press releases. It costs like $500 to send a press release on most like PR wire services. It's fairly cheap. So I'm confused why this hasn't happened more. Like, it's a pretty easy way to get into every journalist's inbox or any media outlet. And like the less sophisticated ones often just copy and paste it. They're more blogs than anything else. And then people look at it and then buy it, and then you make money. I'm also surprised I didn't see like a Ethereum address or a Bitcoin address on there that you have to call for to get your Dubai coin airdrop or whatever. That's just amazing.
Well, that's
got so many
comfortable for a lot of people, right? Like they're probably more comfortable with a phone call than they are with a cryptocurrency.
Oh, I'm so much less comfortable.
Me too. Me too.
Yeah,
but like
exactly.
older generations. Yeah. So, I mean, I think they would have duped a lot of people who were like, finally, an easy way for me to get involved. Someone will talk to me on the phone, say nice things, walk me through it, tell me to turn my computer off and on again, you know? So it's like, it's scary out there. Like, people need to be aware that scams like this happen all the time.
Yeah, this is now making me think about, particularly in regards to the phone call, like I've previously reported on like voice synthesis technology that can mimic people's voices using just like very short recordings. And you can basically type in what you want this to say, like upload somebody's voice, and the software can sort of generate as if there's like voice was saying this whole sentence. So now I'm thinking about like what celebrity impersonator was going to call people and get them to transfer over into fiat. Like, how are they going to do this? This just like hits on a lot of different elements about, you know, the ever shifting faces of scams and things like that. But isn't it so freaking crypto that there was a coin that was this and it shot up 1,000% with this news? I feel like that there are all these ripple effects that happen whenever something like this goes down.
Yeah, I'll mention that similar thing happened when Elon Musk tweeted about Signal, and an unrelated company called Signal, their stock price just like boomed. I was like, guys, come on, do some research there. But like on another note, an anecdote, a quick one, a friend of mine recently, really sad thing happened to her parents. Scammers called them and said, listen, your daughter was involved in a hit and run. She killed someone and she's now been arrested. No, she was drunk driving. She hit someone. anyone. She's been arrested. She's in jail. She doesn't want her husband to find out, so don't call him and tell him, but she needs bail money and she needs it now. And in order to get it to us, we've got a credit card, but go to all these ATMs, put cash into the ATMs. It'll come up and that'll give us enough cash to pay the bail. And they were hysterical. And I think it was like $30,000 that they ended up having to send. Jeez. And they lost it all because it's all cash in an ATM. So, and they knew her friends' names, they knew her children's names, they knew her husband's names. They did a lot of social engineering. So these things can happen. Just make sure that if anything like this happens and money is involved, call someone, verify, get some advice from someone before you go into this. It may be scary. You may be like, oh no, like the clock is ticking. I need to do this before my daughter misses out on her bail opportunity or whatever you think is going down. But verify. It's so important.
And that sort of personally identifiable information that was used to do that research to set up this scam, that's why scammers set up these phishing sites and ask for this information, because they can build out profiles of individuals more generally when you do give up that info. So just kind of looping this back into, how all this is connected in a lot of different ways.
Absolutely. Be careful what information you put on the internet.
Yeah, I was going to say, Naomi, what a compelling argument for the privacy conversation that we continuously have on this show. That really drove it home. But it's time for us to go home now.
I often see just a quick tip for people. I see so many of my friends posting we just bought a house. This is my front door picking up a package, all of that stuff. I once interviewed this Red Hat hacker who gave all these great tips. It was like, never show your front door on social media. Never show what number your house is. Never show what's around you. People use that information to groom you for scams like this. So just be really careful about what you put online.
All right, thanks so much. Those are all good tips, and stay safe out there, folks. We are The Hash. This is Friday. Happy Friday. It was consensus week. We made it through. It just so happens that it's a long weekend, so if you're expecting to see our lovely faces on Monday, you will not see our lovely faces on Monday, but you will see us at the normal time on Tuesday. So have a great weekend out there. Will, Naomi, Jen, Ben, it's been wonderful as always. I'll see you next week. And thanks so much for tuning in. Bye.
Thanks so much.
Bye.